Very good morning to you. It's the 29th of October. It is Trade Live with IG, myself and Scotty Byrne. A special Scotty Byrne, because we are celebrating the UBS results, aren't we, Scotty?
We are. I've had my reference from them now, so I can say what I like. No, yeah, I mean, look, that's what happens when you run strong parts of a business well.
Yes.
If you happen to get, like anything in life, if you happen to give yourself a bit of room to make purchases at advantageous levels.
Discount, some would say.
Discounted purchases,
Yeah.
That's right, yeah.
And we refute the fact that it is the biggest corporate theft of all time.
That's right, absolutely.
Not two old Credit Suisse employees.
Yeah, bitter. It's like Statler and Waldorf on the Muppet Show today.
Yeah, exactly, yeah. Oh, how dare they?
Yeah, exactly.
No deferred bonuses in there.
Still, look on the bright side. For our millions of viewers and subscribers, instead of us being locked away in one Cabot Square, we get to share ourselves with the masses. So I hope everyone appreciates that.
So welcome to the #1 trading show, the fastest growing morning opening bell show in the world. Good morning to you all. Julian Gavin-Ackers, Mr. McKelvey, telling us that Next have upgraded guidance. We're going to have a look at that one. That is good to see. Steve Davies, Ida Rock, and Ecora. I don't know that one actually. Do we know Ecora?
That, to me, if I had to guess, I'd say that's a mining stock. It's got that kind of...
It does, doesn't it?
That kind of vibe.
Steve Davies, tell us more.
Quickly.
Right, let's have a look at what is coming up on today's show then. There it is, Scotty. It is the Scotty Byrne Show as we draw.
I was going to say it's Hump Day today, so to help get you over the hump, you've got a triple dose of me ahead of Halloween on Friday.
Unfortunately, we are coming to the end of Scotty's tenure. Friday will be his last day with me here, which we're very sad about.
Yeah, we can't promise that there will be any kind of Halloween special, but stay tuned, like and subscribe.
I've got an outfit. Have you got an outfit?
I just like throw a scarf on and I'm Gru. It's just the easiest.
See,
I mean, it's
done.
Yeah, done.
Yeah. And there we go. The Scotty Byrne Show.
There we go.
So Scotty will be. Tell everybody what you're going to be doing.
Yeah, so we'll be chatting about a few topics. We've been trying to get what's topical and what's coming up a lot on the Discord. So just to give a little flavour, we're going to be doing where can the market go to. Again, it's subjectivity central, but there's just a couple of things you can look at there just to try to have a bit of a gauge of where we could stretch to in the short term if we have a breakout. Knife catching and risk management, which we hate to do, but we're going to talk about it anyway. No, well, I mean, you could look at the gold price. But we will probably use our favourite discounted retailer as a perfect example as well. We're just focusing on looking for extremes. Knife catching is fine.
I haven't looked at B&M for a while actually.
Hasn't really done a ton. And again, this is one of the things that we'll be talking about when you're looking at these. In the moment, it's very easy to be impulsive, and we'll also be taking questions. So we're going to do two parts. It'll be me droning on for a period of time and some of my badly drawn charts and various other things. And then we're going to take a little break and come back for questions. So hopefully it won't be tumbleweed, and there'll be a couple of questions in there, not just ones like why'd you bother. And then we're going to be looking at fundamentals v technicals. Again, we're not going to go too far down at the fundamentals, but some people, when we're looking at stocks, some people do like just to look at price action.
Yeah.
But it's nice just to know what certain drivers are and things like that, and things we can learn pretty quickly just about what drivers are.
Fantastic.
And then in crypto.
9 a.m. Beachy is in. This is the same Chris Beecham that said he wasn't even going to bother looking at Vodafone in Technically Speaking on Monday. And whoosh, we're going to cover that and more in some overnight action. So I've just taken a look at B&M there. Actually, it has done well. But another stock doing well was Vodafone yesterday. Yes, a clear breakout that we've been waiting for a long time. We did mention it or I tried to get Beachy to look at it in Technically Speaking the other day. He said, what breakout? What breakout? Well, there it is.
Absolutely.
Well and truly broken out now. Vodafone up, what would that be? 40% on the year, I think.
Absolutely. And as regards Ecora, Ecora Resources PLC listed on the LSE, so it must be a minor. So better to be lucky than good.
Let's have a look at that one. Yeah, God, that has done well. So that must be, is it gold?
I mean, we can cheat. We can cheat.
Excuse me. I think we can officially get rid of the cricket sound now when we talk about Vodafone, seeing as it's up 40% on the year. Excuse me. Yeah, Steve Davies, Scotty says it's correct, mining related, volumes up, raised guidance. But what does it mine? That is the question.
Well, we're going to the magic of, oh, there you go. That probably accounts for
screen up, guys.
The nice, steady, grinding share price as opposed to some of the more volatile
base
things
metals,
like gold.
driven by record quarterly contributions from the Mantos Blancos. I would guess that's in South America.
You're such a linguist.
Copper royalty. And, they've got cobalt as well. Nice. The specialty metals and uranium portfolio. God, they've got a bit of everything. I like this company.
Yeah, they've apparently got vanadium as well, which I think is what they make in Wakanda. I mean, it's just made up stuff, isn't it? Made up words.
Right, so yes, but forget all that because, of course, there's only one story driving the market, and that was Nvidia. I absolutely could have had a beauty on this yesterday. I saw that he was presenting. I thought, well, obviously, it only goes up when he presents. So I bought the 194 calls on the IG dailies, but I sold the 197 calls as well.
Curses.
So
I saw they were, what, 204 they went out last night, weren't
then they went, well, 201.5, I think, at 9 p.m. when it closes. But, I mean, if I'd let it run like to that would have just been, that would have saved a lot of pain elsewhere. So the S&P 500, we're looking at the futures here, 6911 almost. Tech 26,150. That is going into earnings season. The FTSE is getting a leg up because of weak cable. We'll look at the reasons why soon, but yeah, FTSE up 15 basis points. Not such good news in the DAX. A little bit of weakness in Europe.
Yeah, I thought a little surge on the defence names recently. That's just petered out again a little bit, isn't it, in the DAX to a degree?
Yeah. Gold. No. Gold! There it is. 3,992. That has actually jumped in the last 20 minutes as well. So that's interesting. Has gold found a base? We'll be looking at that on the technicals later. Bitcoin not really doing anything. I'm amazed to see more volatility in gold than we do in Bitcoin.
I think it's just where the leverage is, right? And this, again, is another example about the whole broken record about knowing what you're trading. Because, yes, gold's a safety play for 20 years. But when something goes, up 50% in short order, that's then a risk asset. So instead of trying to tell yourself, I'm parked in a nice safe.
Safe, yeah.
Nice safe, yeah, exactly right. But yeah, that is interesting, Bitcoin. Now, again, it's just, as I say, it's where focuses are, isn't it? It's just where the focus is. Although, again, I did see from the IRA Sohn conference, which starts this week. So for those of you who don't know, that's where all the hedge funds meet and like to say how great they are and broadcast their ideas. Bitcoin was still, Bitcoin, gold, and obviously AI and so on was still very much a focus of the that conference as well. So that's always in New York. I forget, it's always at some swanky hotel in New York. So I think Ira Sohn was a very famous hedge fund manager. I think he and I went to school with Jesus, yeah. So there's a conference in his name. I don't know if the gentleman is still with us, but there's a conference in his name that the hedge funds always.
Nice. Missed that invite actually. Maybe it went to my old address.
It went, yeah, they must have sent it to your Credit Suisse email address. Or Howard one probably.
Do you know there is something what is it? Oh, it's my contact lenses. I still order my contact lenses with my Credit Suisse email address.
Is that right?
They always turn up. You never need the email.
Yeah, absolutely.
Good, right. Well, seeing as you mentioned it, let's look at UBS then. Huge numbers this morning, a 46% beat and a net profit of 2.5 billion Swisses versus expectations of 1.3 billion. So a huge beat on the profit line there. So I would imagine they would be looking up. We'll get a pre-market for you in those.
Yeah, they've got to be up a couple at least, haven't they?
Yeah, still the question, of course, the Swiss regulators said, right, you've got to increase your capital by 26 billion Swisses because you've swallowed up the Goliath, the behemoth that is Credit Suisse, but they're still negotiating that.
Well, it's also as well they are talking about shifting their jurisdiction to New York,
right?
And the amount of people that still think that they're going to move the Zurich headquarters to America, and the amount of people that read, there's going to be thousands of jobs lost in finance if they go to America. No. It's just the lawyer puts a piece of paper in and says, yes, we're now going to move our jurisdiction to here. It's not the building. He's not going to pick the building up. I actually wonder if their building is like the Credit Suisse one, which is a bit like a Bond villain's lair, where it's got more floors underground than it has above ground.
I would imagine so.
I would imagine they will do around that square there in Zurich. I would imagine they've all got very similar setups.
So there we go, up 74% from the same period last year, and it's provided net profit included net litigation reserve releases of 668 million, primarily due to the resolution of legal matters, probably Scotty's bonus, related to residential mortgage-backed securities business, that old chestnut. And it's
what we got out of that. That's
legacy
number one in the world for 18
activities.
months. Yeah, I don't know.
But yeah, so 668 million released there. So that is part of the beat. So
that's peanuts, isn't it? In terms of what some of the costs have been. The breadth and quality of our diversified business model has once again delivered very strong results. Absolutely, yeah.
Good. Right. What are the newspapers saying then?
Well, shall we go for one for the for the history buffs? This, Rich and I remember this used to be great excitement on Nokia Results Day. That used to be like the Nvidia or Apple or Microsoft Meta earnings of years gone by, with a lot more screaming, and like Rich explained about the Glencore IPO day of having bits of paper sellotaped onto his desk. If you were woe betide if you ever got roped in to help on the TMT desk on Nokia Results Day, you basically got a piece of A3 and you were, scribbling down what you were doing. But yeah, Nvidia taking $1 billion stake in Nokia. That's literally a share purchase. So Nokia are going to issue new shares for the purposes of that. Up 22%. They're going to work on 6G together, which is exciting, but on the basis I get 5G about 30% of the time when I'm walking around London. 6G just seems like a kind of a faint hope. But yeah, I mean, Nvidia are up 5 on it as well, because as Rich said, as soon as Jensen speaks, they go up. But yeah, they're going to use Nvidia chips to power their 6G, and they're going to collaborate.
Well, let's look at the kind of reason why Jensen was doing his presentation yesterday. It was really he had a lot of policy makers there, and the whole thing was a little bit of a love-in to Trump and to the United States, because of course the big thing this weekend is that Trump will be speaking to Xi. And that is a massive deal for Nvidia and for Jensen. So the whole theme of the day or the afternoon was that Blackwell is now built in America.
Arizona, apparently.
In Arizona. And also the next chip will be manufactured there as well. But for national security, then Jensen believes that the telecom towers are not safe because of course, Huawei is involved in those. So that's part of this Nokia deal that Nvidia will be putting one Blackwell chip, one Rubin chip GPU into the new telecom towers.
Okay.
And yeah, that's
crikey, the value of those chips, I hope they're guarded, because that could be the next thing, is breaking into a mobile tower. And obviously, as you say, his plea for some of the sort of help with the talks this weekend must have hit Air Force One, which is where the Donald seems to be spending a great deal of his time speaking to the press, because he called them the super duper Nvidia chips, as we noticed. So
I think that's the name of the next one after
yes,
Rubin.
that's right. Yes, absolutely, absolutely.
So, well, there, Monkey Man asking, is the Nvidia Nokia deal bad news for Qualcomm? But of course, Qualcomm signed the deal with OpenAI, didn't they?
Yes, yeah. I think for 5G and 6G, I don't know enough about the mechanics of
Qualcomm
these
deal.
these kind of cross-holding things. But yeah, I think at the moment nothing's bad news, but everything cannot be good news. But that's what we're going to start finding out in the next 2 days, isn't it, with earnings?
Yeah. So the move with Qualcomm on Monday revealed 2 artificial intelligence chips for data centers. The move helps it diversify beyond the stagnant smartphone market as it gears to compete against Nvidia's AI data center dominance.
Okay, so they're going to shift their focus to data centers. If smartphones are stagnant, then maybe 6G is the thing that gives smartphones a bit of a lift, perhaps. That's I mean, it makes sense. It makes sense. Look, and these guys must all be talking to each other, right? Because it's like the Wild West years ago. If you all rush for the same square meter of land, you're going to go, okay, I'm going to go over there, you're going to go over there, and we'll see what we can find.
And then OpenAI just envelops the whole lot of you.
Yeah, exactly.
Good right front page of the newspaper we have, well, there is a little bit about, of course, ChatGPT. And that is in its shake-up. OpenAI takes on a more investor-friendly structure that clears the way for it to become a for-profit business. Of course, it was always
a lot of people are hoping it does become a for-profit business. If you look at some of the press,
well, as long as it's not a for-loss business.
Yeah, exactly right. Yeah,
and yeah, so you've got this, of course, that yesterday we found out Microsoft was going to own 27% stake in this AI company. And yeah, it's almost like we get a new deal every day, isn't it? I mean, but yesterday was 2 deals.
Yeah. Yes, instead of 1 deal a day we get 2. I'm just looking for, yeah, here we go, okay.
So the 27% stake of Microsoft valued the company at about 135 billion. So of course, multiply that by 4, you got just short of 600 billion. The market for where they would open on an IPO at the end of day 1, so the IPO plus the uplift, is about 900 billion.
Okay.
So that would suggest about a 50% performance on day 1.
Have we got the listing details? I haven't seen a date.
Oh God, no, there's no.
Yeah, right, yeah.
No. This is, by the end of 2027.
Oh, crikey,
but
right.
There is a market
okay.
on it, on IG.
Yeah, I was just gonna say, crikey. That's moved on a bit faster than I thought. And we were talking about sterling, weren't we? Unfortunately, in the Times today, we've got the Office of Budget Responsibility, another kind of hit to Rachel Reeves's plans. So even big hole, another 7 billion to find. I mean, I'm kind of losing track really in terms of.
Why doesn't she just do a deal with OpenAI?
Yeah, just let OpenAI buy the UK.
Yeah.
For 50 billion. I mean, that's nothing, right? If you're going to be
solves all our problems.
100 billion, exactly. Yeah, I mean,
you
again,
could make Westminster into a data center.
Yeah, so I mean, again, it's becoming look, I mean, as we now know,
We
right?
should actually watch what we joke about.
Yeah, that's right, exactly. Yeah, but yeah, I mean, look, you can see policy now. I mean, I still remember when I went to an event, a hedge fund event, before the election in 2019, where social media drives policy, and this is basically another platform for just drip feeding out. So it will be slow cut. So actually, on the budget day, when she actually announces all these tax hikes, it will just be, oh, okay. So it could be one of those ones for watching sterling week into the budget, rallies afterwards.
Yeah,
potentially.
Yeah,
Just
along with the
I know
250.
it's only a month away, the budget now, isn't it? I guess pretty much. So yeah, that could be another one. A little bit of sterling weakness. So yeah, as we said earlier, that's going to help the FTSE, which it's looking like that's following through today.
Nothing to ABF. Tempest doing. Is it worth investing in associated British foods, which is of course Primark? And let's see if they give us anything interesting. Oh, it's had. Do you know what? It's had a big rally in the last month. It lost all that profit warning. Sorry, made back all the loss from the profit warning. Let's see what their conclusion is. It's a hold. Their advice is to hold ABF. Why? The underperforming sugar business, and there's too much global uncertainty.
Wow.
Thought
AB Foods, that was one of the first stocks I ever traded. That was back in the day.
No,
in 1862. Yeah, so my top hat, and yeah, it was. Yeah. So I got seconded.
Was that their IPO?
Yeah, exactly right. Yeah. I got seconded onto the foods and beverage pitch because Stevie Lyons was invited out for a 3-hour lunch and wanted someone to cover the book, and Steve was going right. He used to fiddle with his glasses, and he used to say, right, okay, here's what I'm doing here, here's what I'm doing here, here's what I'm doing. I think I've been on the floor for about 2 months, and he goes, if you need me, ring me, because we just started to get mobile phones on the floor, so we had to take his great big one to lunch. And he says, if you need anything, and it's one of the first trades I did with AB Foods.
To make money in it?
We were long, so we sold them to. We sent them to a broker. So I'm sure they went up 5% afterwards, and I'm sure I got told off for it. But yeah, it was only a little trade. But yeah, it's funny. AB Foods. My
first ever trade was in Next, actually.
Is that right?
And Drisky had a meeting, so he went off, and he went, yeah, just have a little play around there. And you can trade it a little bit. Yeah.
Here's the Credit Suisse training program. Have a little play around, and away you go.
So by the time he got back, I think I was down $4,000 and long about $2 million worth of Next.
Yeah.
And he was.
Yeah, and you wanted to cry your eyes out, didn't you? Yeah, you think if that's what I get away with.
Yeah.
Goodness me.
Right, it is 7:52 then. So let's take a quick couple of minutes. We'll come back. And actually, sorry, there's one story in the Financial Times.
Cool.
And that is in Mittal. Mittal is at risk this morning because Lakshmi has been caught buying Russian oil transported on blacklisted ships. You don't do that, do you? You don't get caught for it, even though the whole of Europe's doing it.
I mean, I thought the process was Russia sent the oil to Turkey. Turkey put them on Turkish ships, and everyone was saying, it's our friends from Turkey. Oh, you've got some oil for me. Thank you very much.
Gracias.
Yeah, exactly, yeah. Wow, look at that. Crikey, that. I mean, if you look in real terms at that picture as well, trying to get those two tankers lined up to each other, that must be a bit of a nerve-wracking...
Oh, so they just chucked the barrels across, did they?
I assume so. Well, like bucket or something, I don't know. Hose pipe. It's nothing else you see him.
Yeah, there we go. The Samara engaged in ship-to-ship transfers with 4 US sanctioned vessels. Oh, he's going to get the book thrown at him, isn't he?
You would imagine so, wouldn't you? You would imagine so. But I mean, so they've been chattering, haven't they, about how Trump and India might be getting near some sort of a more conciliatory approach to things like the tariffs. But yeah, this is just going to bring it right back front and centre as a bit of tension. There we go, Murmansk right all the way around. Yeah.
Told associates earlier this year that he intends to leave the UK over changes to taxation rules. So he's off. There's a house for sale in Kensington High Street Kensington.
Yeah, if us and
Might
all
have a
the
look at that.
if us and all the subscribers manage to get like a £5 million mortgage each, we might be able to buy.
So let's watch ArcelorMittal then, because of course he is the chair of ArcelorMittal this morning, and I don't think that's going to. It's not the company ArcelorMittal that have done this.
Yeah,
but
it's Lakshmi Mittal and his energy company. So yeah, it's. But again, in sympathy. It's just generally, if there's a headline, if you can make 1 + 1 = 3, the market does like to do that, doesn't it?
Exactly. Good stuff. We'll see you in 2 minutes. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Right then, let's go through the results that we've had this morning and the expectations on the pre-market. First of all, Glaxo, good numbers. Consensus upgrades expected. That's what Numis are saying. The stock looking up 3%. It raises its EPS guidance by around about 10%.
That's good for Glaxo, isn't it?
It is really impressive, and there has been some underperformance there. Glencore up 1%. Production report guidance maintained. Next, looking up between 3 and 5. So next, as Andrew McKelvey pointed out to us this morning, strong Q3 results with price sales up 11%, pre-tax profit outlook raised by 30 million. So next, looking up 3 to 5. But what about our losers of the morning, Scotty? Have a wild guess. Which stock has reported numbers and is down 10%?
I'm guessing it's Aston Martin.
Oh, surprise, surprise. As sure as you have Nvidia going up, you have Aston Martin going down. Q3 trading worse than expectations. Get your expectations down.
Yes, manage the market, lads. I mean, it's bizarre, isn't it, for something that makes such works of art on the road?
Yeah, beautiful, beautiful cars, the best out there, and yet they cannot. I don't know, who's the investor relations?
It can't be much cop.
WH Smith down 2 to 3%. They've delayed their date for their prelims on an accounting review. So WH Smith looking down 2 to 3%. The numbers are now going to be on the 16th of December. Right, let's have a look then at Glaxo, especially on this open. There's the chart for you.
Oh, where's that?
Fancy some of those. The bell's too far away.
Are you able to? Yeah.
Which one would you like?
Well, shall we do a dual one again, seeing as it's a bit quiet?
I'm going to be trying to buy some Glaxo. So
Right, you trade some Glaxo. I shall do the Chris Beecham high T-bell.
Right, what do we think then? 3% would have them 17 quid? Yeah, £17 limit.
Yeah.
Am I going to get them at under £17?
Got to get them in. Let's go.
Producer Phil is watching UBS for us. We're weight 1681. Yeah, I have those. Come on now. Direction 1680 and a half. There we go. Right. 1,000 shares bought at 1680. That is up 2%.
Nice.
75 now, 76. I'll have another 1,000 at 77. There we go. Right, let's go to the open then. There's WH Smith down 3.7 and Rolls Royce down 80 basis points.
What else we've got there? Compass down.
JD Sports down despite Next having good numbers. That's a bit weird. And then Diageo.
So it's quite interesting. So I went into JD the other day, and they've definitely gone to the higher end kind of sports fresh. If you go in a big JD now,
So that's not your kind of market, is it, Scott?
absolutely not. No. That's why Next are up and JD are down.
There we go. GSK now getting motoring up 2.7. So we've made about 10p on that.
And that is why, Rich, trading is the ultimate buzz.
Fresnillo recovering. So these gold stocks bottomed yesterday in the US and they rallied nicely into the close.
Yeah.
So maybe we're going to see the same for silver as well.
You could see the price action in gold was definitely trying to base yesterday, wasn't it?
Yeah, that really felt it. The miner's strong, Scotty.
Yeah, it's that sterling translation again to the bottom line and a recovery in the commods. Nice, simple maths that even I can understand.
AstraZeneca up in line, on the back of Glaxo, I would imagine. Antofagasta also benefiting. But then in the financials, we got the financials higher. That's probably not as much currency, maybe for Barclays and HSBC, but...
Yeah, HSBC reported okay, didn't they? That's just helped to steady up. I mean, again, they're looking further east, but... AG Bar, is that the Iron Brew guys?
Aye.
See. You can take their boy out of Scotland.
I haven't had Iron Brew for a while, actually. I need to get one of those out today. And then we get down to Scottish Mortgage Trust, roughly.
Yeah, getting a bit
punch.
So yeah, that's very much the news.
US.
Yes, remember everything is still until this Sunday. Everything in the US happens an hour earlier. So we got bits of data out at 11. Market opens at 1:30. So that means the Fed at 6 p.m. tonight with a press conference at 6:30.
Thank you. I completely would have forgotten that, Scotty. That's
okay. I had a voice in my head suggesting about clock changes. I don't know where that came from, but.
Right, quick look at Europa. Adidas going lower. Adidas down 1.3. It's moving quickly there. Puma down the same. Puma well off the highs of 22.80 when we sold those on the bid rumours.
Nice.
And yeah,
a little bit of softness in the consumer space, isn't it? Which is interesting. So Mercedes up 4.
Yeah, the autos is, so I'm guessing Mercedes has had numbers. Let's look at those.
Yes, 70%.
There we go. 70% drop, but BMW was really bad, wasn't it? So I guess...
Yeah, less bad. Certainly they missed guidance, what was it, about a fortnight ago or something, 3 weeks ago, and wrote it down. Okay.
Right, we're hearing Aston Martin is now open, down 6.5%. Don't even know where, now down 0.007%.
No, but
60 pence. Oh, the DB60. That is.
Where did they float? Was it some like?
Oh, I mean, it was £18.
That's right.
But they've also done share adjustments.
Right. Okay. Yeah. So I was going to say.
So it's more like £30, I think.
Yeah. Oh, It's just shocking, isn't it?
Yeah, probably the worst performing stock apart from SWC.
And Credit Suisse.
And Credit Suisse, yeah, Credit Suisse probably
Can't
comes
go
in
lower than zero.
right, the FX then, Scotty, take us through.
That's that steady slide again in sterling. So that's probably going to go back and target. Let's have a look at a bigger chart in a minute in sterling. But yeah, that's pretty much the standout. As we said, this is probably going to be now a bit of a trend into the budget for the next month, because it's almost impossible to see where anything comes from that unless there's a big sell-off in the dollar. That's the only thing that you could possibly have. So yeah, I think sub 130 we could probably see that. I would guess dollar yen 152. We said like 160 was the big level they intervened last time, but the meeting between Trump and the new PM seemed to go pretty well. They're going to look to collaborate on nuclear power as well, nuclear reactors and so on. So that probably makes sense to me. Aussie stronger with the commods rebound also makes sense. So everything's making sense.
Let's have a look at those commods then, shall we?
Yeah, what a segue. Look at that. You should do this for a living.
Silver and gold. It is, well, you needed that, didn't you? If you've been doing some bottom fishing, you've been catching those fallen golden and silver knives, bit of silverware in the drawer, then you'll be happy to see those up 2% today. Gold, of course, we still waiting Luke Moore to get us on there. And we're hearing some good news in the ear from producer Phil. It sounds like GSK is going higher. But first of all, let's look at gold. Gold has really started to pick up pace there. These gold miners are going to be roofing today.
What was quite interesting yesterday is when you're watching the price action, and this is the thing about knife catching, which we can kind of look to touch upon a little bit further in my fireside chat, as all the CEOs like to call them, is that yesterday I looked at gold about once every hour, 2 hours, and it was up, down, up, down. Yeah. So that's a good battle. That's where the sellers and buyers are having a battle.
So Declan Moore was the first one to teach me that. And I can't remember what we're trading, but he says, Rich, something moves very cleanly up to the point, and once it gets to the point of friction and you see exactly as you described, volatile action, up, down, up, down, up, down, up, that is pointing towards a potential change in direction.
100%.
And that's exactly what we've seen in gold in the past 24 hours, really, isn't it?
Yeah, so you can see a very fast move lower, and then you have that V at the bottom, which everyone thinks they can capture, but you generally don't. But this is what we will be touching upon. But yeah, especially yesterday, you can see it's found a little rebound, had another surge, more selling again. So that's when the buyers are getting back in charge. And this is one of these things, if you're looking at the chart, just ask yourself who's in charge. Now, again, it's back in that little zone, right where Rich's graph is. It's back in that little zone where you would want it to break that area there, kind of 40-20, like 4,000, 4,020. If it breaks that, then you're going to be heading. I can't see how it would materially ahead of the Fed.
Yeah, big night for gold, isn't it? Yeah.
So I would imagine this is probably where it settles for now. But yeah, you can see the noise before that extra leg down yesterday morning, and then the battle starts again, and we're back in that zone, as it were.
Nice, right. A quick look at ArcelorMittal then, only down 1%. Fancy should have maybe looked at those at the open as well.
But
because
it's such a tricky one, Rich, isn't it? When
it's not the company involved.
When it's not the company, it's almost like a hearsay, and unless you literally are really disciplined at the open with where you're going to sell them, and you're looking at a tiny turn, you might make 0.5% out of it. Because it's not, again, maybe Trump might say something, but again, you're not really going to sanction a European steel making stock.
Well, no, you wouldn't sanction them at all, but he is not going to be in good light over it.
No, of course, absolutely, but that's not affecting the fundamentals of the company. It's affecting the individual, and this is where it's so tempting when you see the guy, especially because he's so synonymous with it, because it's his company.
Yeah.
Again, the individual can be sanctioned, but again, the company is a more difficult.
You've seen more surprising things come out of Trump's mouth, haven't you?
Well, yeah, like anything. Asian markets, actually, did we look at Asia, particularly the last time I saw, I did see Asia was just struggling a little. Hong Kong tech was down, but next up 6.
Yeah, next up 6. So that should be taking Marks and Spencer's up. Yeah, Marks and Spencer's up 1 above the £4 mark. That is where Philip Green came in to bid for Marks and Spencer's back in 2004. It was £4 bid. Him and Richard Caring. That is the reason why Richard Caring now owns the Ivy, because he didn't get Marks and Spencer's. So he was unemployed on the Monday morning because they had given up the management of Topshop. So they came in on the Monday. Stuart Rose was parachuted in to save Marks and Spencer's.
That's right.
So Richard Caring came in on the Monday and went, I'm unemployed. I've got nothing to do.
Yeah.
And I've got about 100 million in the back pocket. So he went and bought a few restaurants, including the Ivy.
Yeah, it was Le Caprice, wasn't it? All those kind of ones that just faded a little bit, that were a bit cloth-eared.
Yeah.
Having had a lot of fame and notoriety in the 1990s. I suppose he's thinking, if I can't buy ready meals, I'll buy restaurants instead.
Yeah.
Makes sense.
And it was after lunch at, what's the golf course down in Surrey?
I'm not the Goldfinger place, is it? Stoke Park? Is it Stoke Park?
No.
Wentworth?
Wentworth,
yeah.
So he had lunch at Wentworth and he went, wow, this food is fantastic. How do I get you to come and work in a restaurant for me? So,
is that right?
Anyway, and Marks and Spencer's have done nothing since. It's back to where it was bid for.
Yeah.
But Next certainly has. Next is certainly one of the champions of UK retailing. So up 7% today. We see Glaxo above £17 now. So we got some nice cheapies there in the open.
Yeah.
And yeah, Scotty, just covering. Let's see. Producer Phil obviously has some Asian overnight moves for us, doesn't he?
Oh, sorry. I actually thought I saw them. Up on the, I've got them loaded as a page on my.
There we go, Scotty.
There we go. Yeah. So Nikkei's now cleared that 50,000 mark. So yet another all-time high. That was pushing on. Hang Seng's still drifting higher on the optimism over trade as his career. But look at the Korean index again. That's just flying. That's the very tech proxy index. But yeah, but interestingly, within the moves in the Hang Seng. Hong Kong tech is lower again now. Whether that you're thinking that some of the gloss will be taken off of those names by their reporting today, but what's quite interesting is that the actual looking at the graph of that, it's just failed to break the 20-day. This is a very simple graph with moving averages. You've got the 20-day and the 50-day because most things are clustered around there for now. So yeah, you can see it's rejected that move higher. So perhaps some of the gloss, as I say, of that rebound is being taken by the potential for the big names reporting today or tonight.
Right, that takes us perfectly into looking at a preview of what to watch tonight then.
It does.
5 things to watch out for in big tech earnings. Of course, Apple, Amazon, Meta, Microsoft and Google report over the next 4 to 8 hours. 39.
I do like that graphic, actually, how it's used the company icons. I know I'm easily pleased, but
yeah, it's nice.
It's nicely done.
Very
so
good.
I think for us, the one that's probably the toughest to call is potentially Apple. Because Apple, of all of them, is prone to a travel and arrive. Whatever it is, whenever they make announcements, new products, headsets, they just always sell off.
Yeah.
And I guess when you have a company that is Steve Jobs and now the fact that he's no longer here, I mean, what an act to follow. And they're ubiquitous. So yeah, for me, the least exciting money there is Apple, generally on how they announce and they perform. Yeah. But it's probably one of those ones, if I was purely speculation, if I was long these into numbers, I would want to lighten the load.
Yeah, up at 269.
Yeah, I would definitely want to lighten the load and then have another look once you get the shakeout after a day or two, which is what they always seem to do.
Yeah. But the Times has put 5 key things to watch together for us. So the first, capital expenditure. Spending on infrastructure, as we all know, is unprecedented and shows no sign of slowing. You're not going to get any sign of slowing tonight, right? There's no way that the companies have already gone all in and they're not going to take a step back. So Meta expected to spend up to 72 billion, Alphabet 85, Amazon over 100 billion, and this is where all this talk of a potential capex bubble is coming from. So will we see any commentary on that? Second, revenues, of course. The rush for AI returns. Will we get some answers to the key questions? Do the returns from AI sales justify all this investment? Is it being widely adopted? And is it delivering real value to customers? So a recent study from the Massachusetts Institute of Technology found a 95% failure rate for AI projects. Mm-hmm. That must be some of the answers I get from ChatGPT as well, because some of them are rubbish.
Exactly, yeah.
So forecasts point to the overall revenue numbers rising at a clip, but investors will want to know how much of this is actually related to AI. Advertising figures are going to be key at Meta. That's expected to deliver revenue growth of 22% up to $49 billion. Alphabet, you're looking for revenue growth of 13%, and Amazon a 12% rise in sales, Microsoft 15%. So all decent, you're talking about paying 30 times earnings for 14% of revenue growth.
Yeah, I mean, those are proper numbers, aren't they? But as you say, it's going to be a bit of the detail.
Scotty, do you want to take us through the third thing to watch for?
Cloud. So this has been something which has had a few mentions, but basically storing data is going to be how you access it, how you use it. Selling data as well is going to be a large part of the drivers there. So yeah, it's the growth in not just the capacity, but it's the demand.
Yeah.
So as we can see there, the demand for cloud continues to outstrip supply, which helps you understand why they're spending on cloud and data centers. But again, the growth in those, you want to see that demand growing further to justify that forward spend.
Yeah, big time.
That's going to be
just some evidence.
Exactly, some evidence. It need not have to be blowout, but just evidence it's moving in the right direction. Because if they converge at some point, then that's where you're seeing the value and you can justify the valuations. But if there's a sign that if that's the spend and the demand is starting to top, then hardware. I mean.
Yeah, so let's look at hardware then. The gadget arms race. Go gadget arms. Meta has continued on this wearable technology with the AI-powered Ray-Ban display glasses that Terence in the gallery has demonstrated for us. So analysts are going to be watching out for sales on those. Apple, of course, has its new range of iPhone 17. That was at the start of September, so that the numbers for that will not be in this quarter. Apple was the only brand in China to grow smartphone shipments in the third quarter of the year.
Yeah.
However, recent days, analysts at Jefferies noted that delivery lead times for iPhone 17 models were trending down.
Now, that can be explained away with supply chain. Again, this is where being a CEO is a tricky job, and your use of language is going to be very key.
Yeah.
But yeah, I guess, again, it's the extent of the trend down. This is what we're trying to capture. Okay, you accept that if demand is higher than even you expected, it's great, which is why the shares are where they are.
Yeah.
But you're still having to make these physical things, ship them and get them out.
Yeah. And avoid the tariffs.
Sorry.
Sorry, not avoid. I mean, encapsulate.
Encapsulate, yes, absolutely. Factor in.
Factor in, that's it. Yeah, prices up. Right, God, all these advertisers for IGA.
I know.
And then finally, of course, China. And that is the tech trade wars. So tech is being weaponized in US-China trade wars. Trump and Xi convened for talks this week, but the big tech companies remain very much in the eye of the storm. Are they seeing any impact on their operations from tariffs? Are there any supply chain constraints or any penalty from tariffs and trade restrictions? So that's the 5 top things to watch for. Of course, China. We haven't touched on the Federal Reserve, as Scotty said and reminded me, thank goodness, because I have to cancel my spin class now. The rate decision will be out at 6 p.m, so that's obviously going to be 25 points lower. But then the press conference, the all-important one tonight, because there is no SERP. No
Yes,
dot
there's no dot plots. Yeah, there's only, what was it, 4 dot plots a year of the 8 or something? Yeah.
Yeah. Every quarter almost.
Right, it's now time for the part that I've got wrong out. Sorry, right 1 in 100. But again, happy to take that. It's time to guess the chart, and it's coming from which region? The United States of America.
If you're excited about that, if you're excited about seeing the Scotty Burns show next, then give us a like and subscribe, please. Give us that big thumbs up down there. And Scotty's second last show, then yeah, give us that thumbs up. Thank you very much, all. And yeah, looking forward to seeing this, and looking forward to this evening. I've got my podcast tomorrow, so I'll see you on Friday. Peace.
Light up, the city hums. Here it comes the market drum. Rich cracks wise, Hank spins through. Another bright morning with a whole crew. Charts in motion, candles gleam. Data dance like an electric dream. We're guessing the chart, feeling that spark. Turning the morning into trade lie with IG. The sun breaks through the sky. Guess the chart and ride that high. Trade lie with IG. The rhythm never ends. We're market movers, dreamers, friends. Phil's in the booth, the sound's on fire. Axel with a trade that's flying higher. Peers on tech, watching that line. Chris got numbers that redefine. The chat lights up 1,000 hearts, moving together when the trading starts. No fear, no doubt, just that beat. This is where the world and rhythm meet. Trade lie with IG. The sun breaks through the sky. Guess the chart
Hey everybody, welcome back. Well played to Jugger. Just got in there in front of Jim for Caterpillar, the big mining equipment company, which has been appearing on a lot more kind of stock tip sheets and recommendations of late. Hence the price action, which is interesting to see there. I guess with the mining frenzy, that's no surprise to see that move. But for a stock that's pretty dull, that's another strong kind of 3 month move. So good to see. Well played, Jugger. Good spot. I did get that as well myself, but I'm not quick enough to get up on there. Right. Welcome back to Technically Speaking. After the tidal wave of requests for me to come back on, there must have been, I think it was 3 or 4 people at least asked me to come back on. I was just trying to go through the Discord in the last week or so, try to pick up what some of the topics might be that we want to talk about, and so hopefully this will encompass any of that. It's split into 3. We're going to do where can the markets go, and knife catching / risk management, a quick break, then fundamentals v technicals, and then we're going to have another quick break, and any more questions that you want to put in, of course, you can ask as you go. We'll try to get back over and cover those, but if there's anything you really want me to touch upon, then leave it until a little bit later on, and we can look to cover all those questions as best we can. So, of course, every time we make a new high, the question is always, where can the market go? How far can it go? Now, I'm not trying to attempt any forecasting here with what next year's growth numbers are going to be, rate cuts and so on, but the tailwinds do still seem to be in place for now. We've survived a couple of little pullbacks, and so a lot of models are based around Fibonacci extensions, even when you do what's called the 3 waves approach, which is done over sometimes several years, where the argument is the market will do a wave, a pause, a wave, a pause. Then the 3rd wave is generally where you start to see a turnover. They're all based off Fibonacci extension. So I've done a quick one here myself on TradingView, if we can just go to the screen there. So again, hopefully enough of you are comfortable with Fibonacci levels to know what they're based upon and how they work. This is the Fib extension tool, and just I won't redraw it for the sake of time, but basically you take the absolute low here, you go to the high, which is yesterday's close, then you go back to the next higher low. So you can see it plots off 3 points, and you've got these extensions here, which we can, oops, that's not very clever. What have I've just broken that. There we go. So then we can go to, if you see these extensions, so we're not far away from the 100% Fibonacci extension from this low here. So that would take us up to 692.61 on the SPY, which is the S&P ETF, and then we start to get into this zone here, the extensions, which is the mathematical extensions for the Fibonacci level. So then if you go to the next extension level, that gets you up to 740, but in between there we've got lots of noise and lots of levels that you can look at. I mean, again, you can go back to the market loves a big level, so obviously 700 is going to be the next resistance. But the thing about the market is nowadays is that if vol starts to drop after the Fed meetings this evening, if reporting for the tech names are strong on balance, the market won't stop and pause at levels. As we know, it will just drive higher and drive higher. But for those of you who want to just try to see a visual scale of where this could go to, I think this is a pretty handy one. As we say, we don't live or die by these levels, but we do try to just be aware of them, so that if they were to pause, we can kind of see why, insofar as mathematically or even statistically it makes a little bit of sense. A very, very simple one as well, if you look on the book, which is written by Jim Murphy, the technical analysis, the financial markets, which is basically, that's the curriculum for the MSTA qualification. You can just look simply at a weekly high. So if you get a weekly chart up, basically a definition of a breakout on those simple metrics is if you take the weekly high, and then if the following weekly candle breaks that by 3%, that's a confirmed breakout as well, if you want to live by simpler numbers. And then just to stay, if we can just come off this chart a minute, please. And then if you want to even look at longer term trends as well, you can use basically swing trading methodology as well. So if we go back to look at the SPY, again, here we've got the weekly chart at the top, and then the 4-hour chart at the bottom, and they're really aligning nicely insofar as you can see the weekly at the top, you're making higher highs and higher lows very, very clearly there. And then on the 4-hourly, again, you're making higher highs and higher lows in the corner there. So at the minute, the market is set up to move higher. And what we were talking about on this weekly, so this is the candle for last week. So you can see the high there is 677.53. If you add 3% onto that number, that would be the target for a confirmed break once this week's candle closes. Because remember, this is a weekly candle, a weekly graph. So all those candles at the top there are 1 week. So again, I don't want to try to go too far into forecasting for the market, but for me, looking at the setups right here, right now, the market is confirmed on a grind higher, but also you've got so much to get through the next 48 hours that obviously that could reverse or accelerate. And then some of the arguments for tonight ahead of the Fed, that is the CPI data clean? Now, I know we've got a lot of questions around the labour statistics and the relevancy of that data. But again, in a government shutdown, even though the market rallied on the CPI data last week, is it reliable with a government shutdown? Is the sample set big enough? The market's pretty much baked in for a 1/4 point cut at this meeting and the next one this year. But again, Powell may just allude to something around the data and so on, because there's been such a lack of it. They may have access to certain metrics which we don't necessarily see. And again, you could argue, why is the 10-year yield stuck at 4% if everything's rosy and rate cuts are coming? But anyway, let's not dwell too much on that, because we're going to find out this evening what that's going to look like. Again, as we said, 6:30 is the press conference, which is the more important part if you want to tune in. It's normally live on YouTube. So yeah, that's some of our thoughts at the moment. Market's set for a breakout. So where can it go to? That's a couple of simple tools for you to look at and to use at your leisure. So now we are going to go to knife catching and risk management. Now, again, this is not something that I necessarily do myself, certainly, but again, I can see why people want to do it. There are opportunities. So what we're going to try to just explain is just perhaps some of the things you want to think about when you're looking at how to do this. And for anything that we want to focus on for this kind of approach, is if you want to disregard the long-term trend, even though I say, what's the chart telling you? What is the long-term trend? Now, for BME, as we've said before, almost ad nauseum, that is not a company that's in good shape. However, as we can see here, there are opportunities to play for a bit of a quick mean reversion trade. Some people like a quick trade. So we're just going to add a study of the RSI. Okay, in here. So again, when we're trying to look at opportunities for a quick turn, a quick trade, which again, that's your prerogative. We're just trying to play these extremes. So when you can see here, so if I just make a quick horizontal line, so you can see here, this is where the RSI gets to extremes. Now again, I don't know how au fait everyone is with the RSI. The standard settings of the scores of the RSI, if you see the scale there at the bottom, it's effectively 0 to 100, although it's more focused in because between 30 and 70 is accepted bands for RSI. So anything outside of that, you're starting to get into extremes. But again, this goes back to, again, at the risk of sounding like a bit of a broken record, how long are you going to hold this for? What's your position size going to be, and what's your expectation? So we can see here, when the RSI becomes stretched, It will have a dip below the 20 level even. I think last week it got down to, or the week before last, it got down to 12. So that is stretched. It is extreme, even for a company that's not in the best shape. But again, just by looking at the charts, and I'm not expecting you to go through this when there's news out in the stock, but you should really try to take just a couple of minutes. That's all this really takes for you to draw some conclusions. So if you see here back in March, again, it was oversold. It had earnings, a big sell-off again, not the gap down that we saw a couple of weeks ago on the CFO leaving. But again, when you're looking here, it's at extremes, but then just look at where it's come from and just simple things like how long this takes for it to recover. That's a month. So the stock's done nothing for a month. Even after hitting RSI, the stock's done nothing for a month. So just to ask yourself, and this is something that crops up on the Discord, is that you may look to take a position. They're generally long most of the time on these announcements because it's more exciting if you can buy something really cheap when the market is selling and see it rebound. I completely get that and understand it. I have done it myself. But it's not a strategy I generally look to follow now. But however, when you're talking about or looking at your position, even when you look to take that first position on, you can just have a quick look at the chart, even on the daily chart. Again, you don't have to spend a lot of time on this, but just have a look and what your expectation is about how much you're trying to make. You know, and yes, the stock recovers. Even after poor earnings, it goes down, it does recover, but it takes a long time. This is not a stock in particular, it's a V-shaped reversal stock. Although again, if we go to the chart at the bottom, and I'll just move the scale up a little bit, you can see, yes, there are opportunities for a quick V-shaped trade, and that's absolutely fine if you want to do that. But please, 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 just even try to get some kind of average over a couple of days, because look, this original sell-off happened, the stock went down for 2 days, almost 3 days, and then started recovering. So even when these news items happen, I know the impulse on the headline is to jump in and go, I have to get involved right here, right now. But just try to just see where the extremes are versus prior occurrences. Are we in that extreme area then? And just try to give yourselves an opportunity just even to do 3 tranches of a trade, just to get some kind of average price rather than say, okay, I look to pick the low, or here's the low, and so on. Because if you add volume into this as well, that can give you a little bit of an extra clue. Some people who look at charts only and just look at price action don't generally look at volume as well. But we can add that in as a quick study, just to give yourselves a little bit of an idea of extra quick tools that you can add in. So when you put the volume in at the bottom, oops, sorry, I put that on the wrong chart. Silly me. Just want to talk among yourselves a moment, please, folks. Okay. Yeah, exactly, have some cricket. So you can see there, look, that's nicely displayed on the data there on the Monday, massive volume. So this is where you know people are being forced sellers. So you can marry up the price action with the volume if you want to use that. Again, you shouldn't be married to it, but this just gives you a reasonable expectation that we are at an extreme. Volume is huge. The RSI, again, you can use other metrics, but a simple one is the RSI. Just look left on a chart. As we've always said, you can look left on a chart and learn something from it. That was at a proper extreme. So even though I don't like to do it, I do understand why people would want to do it. But just give yourself a little bit of an extra cushion where you can just say, right, that was a proper extreme day. And yes, I'll look to take a third of my position there for what I want to trade, then just see how the price action happens. Because institutions, when news comes out like this, don't generally make a decision there and then for what they're going to do with the stock. They'll have to think about it for a couple of days, decide what they want to do, and so on and so forth. So again, the volumes, big sell volume here, net buy volume happening here. This is why I like TradingView. The red bars are big net sells, the green bars are big net buys. So yeah, I can see the argument here for building, even over 3 days, a position just to get back into and then let it play out. But however, if you want the thrill of a quick trade, that's absolutely fine. I get it, I understand it. But just looking at this lower bound again, just buying some on that initial knee jerk very rarely works. You need to give yourself a couple of days just to watch the price action and observe. So if you can just try to just think about doing a little bit of work, even when the news comes out, just a little bit of work. Where are we in relation to, say, other extremes? If I want to step into a trade, and you could hold this for a couple of weeks and make some okay money. But again, just looking back, this is a slow recover, a slow burner. So you don't have to try to pick one particular price point. Look for extremes. Try to give yourselves an opportunity for 2, 3 or 4 entries, because levels do tend to get retested again as well, especially intraday. You can see there, levels got retested. It looks like it's stabilising, sold off again. So I didn't want to spend too long on this. Hopefully this is enough just to get you thinking about how you're going to approach more extreme situations like this. Again, I hate playing headlines, news announcements or earnings, but if that's something you enjoy doing, I'm not going to tell you to do it. Just protect yourselves as best you can and give yourselves a bit of breathing space instead of looking to nail that perfect move. We're just going to take a quick break there. And if you want to get your questions in, please feel free to go ahead.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Hello everybody, welcome back to Technically Speaking. Thanks for the comments and a couple of questions. Nice to see Andrew and Funky Gibbon are using, which I think is some great methodology, just to give yourself some breathing space and just to maintain that degree of control. Julian, MACD indicators, like any indicator, you can't just use them in isolation. There's no magic in there. I mean, most experienced chartists will be able to look at a naked chart with no moving averages, nothing like that, and they'll be able to tell you what the MACD is doing, what the oscillator's doing, what the stochastics are doing, what the moving averages are doing. So again, this is not to say not to use them, but again, it's generally in conjunction with something else. So if we just go back to the chart, the S&P or the SPY from last week, when you're looking at the Trump sell-off we had a couple of Fridays ago, now very simply, you can see we touched the 50-day and rebounded, which is enough of a key for most people. Now, some people will try to tell you there is a strategy that's called a MACD slingshot, where you'll see a turn in the MACD before the market moves. But here you can see the MACD, the blue line is above the red line, which is not unlike a moving average. Again, these things all do feed off the same data point, you've got to remember. So we did have a turn below there, which shows that the market is sold off. Now, what is interesting for people and why people like to use MACD, it's a confirmation. So a lot of people, especially when you're swing trading or trying to get back into a trend, this is where MACDs are probably a better visual representation of what you're trying to read from a chart. And again, once you get more experience looking at charts, in no time at all, you'll be able to look at a chart at a glance, know if it's making a higher high, higher low, if it's broken a new high and so on. But this is quite interesting where the MACD is telling you, even though the market has rallied off the low, not to generally participate because this is a cluster zone. And again, this can be called certain other things. It's lack of a breakout. When you get such a big candle, like that one-day sell-off, you're going to have a lot of inside days, as they're called. So until you break out of the high low of this candle, all these days trading sessions here, of which I think, just counting it quickly, nearly 10, are just saying to you it's an inside day, so it's not confirmation. So when you're looking at the broader market or you're taking a position, you can look down, as we said, look at the daily, look at the hourly, what's the overall market doing, and so on and so forth. So this MACD is another expression of all these inside days. So yes, the market has rebounded, but it's not breaking out. And now you can see here, it's broken a new high. It's broken the high of that session there. And then, hey presto, that MACD blue line breaks above the red line. So that's confirmation. So again, there are several measures you can use. If this is the one that you're more comfortable with, and this is why the subjectivity of charts frustrates people, but it's also subjective in that you have to do what speaks to you. But however, this just all makes perfect sense looking at the MACD. Again, I think nowadays, because of the way markets trade, when I signed for DND probably about a year ago, 15 months ago, they did have a MACD slingshot strategy where you did find there were turns in the MACD before the market responded. But again, that's got smoothed out, I think, by lots more algorithms and I guess market efficiency, if you like. But yeah, it's another display. You could even draw a wedge pattern here around these shapes in the market, like you can see there. That's a wedge. I mean, this is not the wedge tool. I'm slightly cheating here, so apologies for people at TradingView. So you have the pennant there, which is like a flag. Again, until it breaks out of there, it's just inside that zone. So there's lots of things you can do. It's just all depends what speaks to you, and then you get the confirmation. It breaks out above, and now we're pushing higher. So I have used them. I don't use it as a part of my standard setup, but there's absolutely nothing wrong in you doing it. So I hope that answers your question. And then we're just going to get rid of the MACD indicator, if you'll excuse me. So now we're going to go to fundamentals and technicals. Now, speaking to Maturin, his strategy is very much a swing and a trend following strategy. So you don't have to worry yourself so much about what is going on with a particular stock, or to concern yourselves around it. But it can be interesting for people insofar as, yeah, again, it's what speaks to you. And if you like to know or to understand when you're trading something, why you're trading it. So this is a conversation, and I started looking at on running, which I've got a pair on today. So this is not a stock call, simply because I'm wearing some. I don't think that's going to move the needle. But again, when you're looking at things like on running, you can marry up some of the fundamentals with the price action, if that makes you, or just helps you to understand. As we've said a few times on the Discord, you shouldn't just necessarily make notes when you put a trade on. Most people have a short list of stocks that they like to trade, the stocks that again speak to them, at the risk of using the same phrase. Hello, Kate, and that's very well timed, because what Kate's done is she's evolved now to a stage where she does her homework on stocks outside of market hours, which is generally the best time to do it. If you're trying to analyse a stock to whatever degree you wish to, doing it in market hours just helps to trigger certain other thought processes within the brain, which is it can be unhelpful. So, for instance, we started looking at on running. So this was in the summer. Someone in the gallery had a position in on running. So we've just got the chart up here. So here was the peak. Markets have recovered from the sell-off from Trump, but we'd started breaking lower in on running, and my question was to the person who owned this position, why are you owning it? And their answer was the Olympics, which is obviously doesn't maybe suggest that you've done enough groundwork into understanding why you've got the position. So I have been following it. Just as an example, you can see here it's breaking the 20-day moving average, so that's more sellers coming through. It's had the stabilization area here, but now you've had the 20-day breaking through the 50-day. But what I wanted to focus on was just some of the metrics around using the PE. And again, you can ask AI some pretty simple questions. You don't necessarily have to ask it, is this a good stock or a bad stock? Should I buy it? Should I sell it? Because this is the danger of effectively asking a chatbot, because that's all AI is right now. It's a chatbot. It's not an alpha engine. That version that we're using is a chatbot. So I recall at the time, on running was trading at a high multiple versus industry peers. And this is where, once you get to use the right language of asking AI the right questions. So it was trading at a high multiple. It had earnings upcoming. The share price was going down. So it was trading at a premium because of the branding, who's involved with the stock, and so on and so forth. But when a stock you might like, or you like the idea of, or you like the brand, is going down systematically like this, you have to start saying to yourself, why is it going down? So it was trading on a high multiple for next year. So the PE was high relative to its industry peers, and the stock is going down. So that is saying to you, people are visiting the company, they're talking to it, they're getting some guidance from the company, the share price is going down. So what was interesting for me was on the earnings day here, which hopefully you can see it, you had a big spike higher, and then the stock sold off aggressively, and it's continued to go down. And you don't have to be a research analyst to understand how stocks move and why. So if I can just come out of the chart a moment, you can ask AI, whichever one you use, to run a valuation box. So this is a very nice, simple valuation box. First of all, ask it, who are the industry peers for this brand? Make sure they make sense to you, because the first thing I asked AI was, okay, it's industry peers, and it listed 3 which were the subject of a takeover bid or had no data. So you have to push it into doing, into asking the right questions. So it's got some US peers, and I asked it to include Adidas and Puma. Hopefully that's come up the right size. Let's try to zoom in a little bit. There we go. Oops, oh crikey, that's a horrible bit of zoom in. Is that okay? Yeah, fine. So you can, there we go. So you can see here, you've got On Holding, Nike, Burlington Stores, which is like a branded outlet, if you like, Puma and Adidas, Deckers, which sells Uggs, and Hoka's, which are another sort of rival for On Running in the kind of leisure running space at the moment. I mean, if you go around, you see On have huge concessions in shops. You see Hoka have their own shops. So that to me is a reasonable representation of the peer group. So you can see On Running now has dropped to a 27 forward PE versus a Nike at 44. Puma is still incredibly high on a PE basis at 56. Adidas have a range for PE for next year because the guidance is unclear. So On Running is cheaper than it was because it was trading at a forward PE of 50 odd times. Now, obviously, that's come down drastically with the share price, and it's getting cheaper. But then when we asked ChatGPT why was that share price reaction and why it played out that way, you saw the big spike higher on the chart I showed you, because people focus on revenue numbers, right? Because they're the biggest numbers. And again, you don't have to be a research analyst and know about all the drivers, but this is why we don't trade results day, because revenue numbers are always huge. Any CEO wants to get revenues in, but revenues can be bought with discounting, with pricing, as we saw for BME. There's only so much revenue you can bring in with levers you can pull. But one thing you cannot change is the earnings per share, right? This is why PE is the guide that so many people use, because that's price relative to the earnings. If the earnings are going down, the shares are going to go down. Revenue is an input. EPS is the output that you want to capitalize. So when earnings are going down, the E in PE is what drives it. So for instance, this evening, when you're looking at the tech companies, and tomorrow there's going to be some massive revenue numbers. It's going to be almost incomprehensible, the size of them. But again, it's the detail. So when you go down, or even the next day, just have a look at what the EPS are doing. So for On Running, the simple metrics are, and these are just the simple fundamentals you have to understand. The share price is going down. It was overvalued in the summer. They came out with earnings, big revenue beat, but EPS went down. They're going to keep going down until EPS turns. Now, they do report in a week or two. Forward EPS for next year is very high. One other thing that they cited was the strength of the Swiss franc, because it's a Swiss company. So have a look at the Swiss franc. Has it sold off? No, because the US dollar's weaker. So those same headwinds are going to be in place. And that took me 5 minutes. Now, again, you could say it's easy for me because I have done this for 75 years. However, if you're the kind of person who doesn't just want to focus on price action, if you want to understand the levers that are getting pulled, those are some of the simple things that can help you. And you don't have to be wedded to an idea, okay? Next set of earnings, for On Running, it's cheaper, they have come down, expectations are still high. It's not at an extreme. It's not something where I want to buy that company no matter what. But again, for On Running, say even against Nike, Nike have had this rebound, they're struggling to push on. There is nothing to stop you. There is enough of the data available now that you cannot say to yourself, oh, I don't have a degree in accounting, I don't have a degree in economics. You can focus on these things enough so that your level of understanding just helps you to understand the price action. The strategies are the same. We look for breakouts, we look for breakdowns, we stage into a stock, we have trailing stock. You've got to focus on these things. But again, there is nothing to say that you cannot look at these metrics yourselves and understand them, because they're there, they're stated, just understanding them. But this is why Rich, if you look back at some of the videos Rich has done, it's on the PE, right? It's a function of earnings. When a company earns money and the EPS is going up, the shares are generally going to go up. Even when the market's doing nothing, the shares are going to go up because it's net profitability. Hopefully that makes sense. We've come to the point of charting crypto. If there's no other questions, that's absolutely fine. You can put more questions on afterwards or ask them on the Discord later. I hope that made sense. And thank you for listening. And enjoy the rest of your day. And now we're going to go to charting crypto with Mr. Beecham.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Good morning, welcome to Charting Crypto with me, Chris Beecham, standing in for Axel Rudolph, who is still, I wouldn't say sunning himself in Japan, but enjoying himself in Japan, walking a lot and watching Nikkei go up. Let's look at what we've got in crypto this week, which has been a week of, since we last met, a week of rebound for the asset class. Not a bad performance, although you start to wonder about the momentum that's looking a bit peaky over the past couple of days. We're starting off with Bitcoin. Excuse my cold as well. Once again, 116,000 level has provided quite a bit of resistance. This is mirroring what we saw on the 12th and 13th of October, that this level is still the one to break. We did have, and I'm going to channel my inner Axel Rudolph here, we've all got one, positive divergence in our stochastics. So you had a lower low in the price over the past 3 weeks, but a higher low in stochastics, which can be a positive sign. Of course, nothing is ever guaranteed in markets, but it is notable. And I'm sure a few crypto bulls have taken comfort from the fact that that is what we've seen since the low on the 17th, the 18th, and 19th of October, that the price has pushed higher. But as I say, the barrier remains this 116,000 level. We did our best to try and break through it. And it's interesting, this comes at a time when you've had strength in stocks, but obviously over the past week, weakness in gold prices. You can't really separate out crypto from the rest of the financial universe anymore, if you ever could in the first place. So you've had 2 days of weakness, perhaps maybe ahead of the Federal Reserve decision tonight. We'll see what they say. But anyway, the price action is there. 2 days of dropping back from this 116,000 level. So it's now really up to the crypto bulls at this point, sort of make or break moment. If you can get and avoid really and sustained drop back below, say, 112,000, otherwise the risk is that this turns into yet another failed crypto rally and continues the rather mixed story we've had actually in crypto prices since late July. Namely, we did see a record high in early October, but we haven't been able to sustain it, and we've been regularly revisiting this area around 107,000 really. We did test it much lower, obviously, in October, but the buyers did come in to defend this zone of support and mirroring what we had at the end of August. It's just the fact that we're not seeing the upside for the time being in the price action that would really sort of justify a more sustained move to the upside, and would suggest that what we're seeing isn't just continued consolidation if we zoom further out. It's actually more of a sustained return to the uptrend that dominated from April into about the end of July. So Bitcoin, very much a mixed performance, still only about a month away, if not even that really, from the record high, which comes after those very, very strong gains. So you have to put this stuff in context. That they've just maybe seen this extended consolidation. Those of you who may have been trading gold as well, remember the extended consolidation you had in gold from April till about July before it really took off, and when it got going, it finally got going. Maybe the same thing happens here. Certainly at the moment, it's very much an attritional battle between the buyers and the sellers. And at the moment, the sellers might just about have the upper hand with that failure to break 116,000. So that's, I think, what we're watching at the moment is your level on the upside, maybe 112,000 on the downside. If it closes below that on a daily basis, you might well see then yet another test of 107,000. So patience is the name of the game for the crypto longs, indeed the crypto shorts, should there be any really, at the moment, that we've seen this sideways pattern. And it's about understanding that if you're expecting much longer term move here, it may just be a frustrating period. As you know, as I've said with other things, markets only trend about 30% of the time, a third of the time. The rest of the time, it's often just given over to this painful consolidation. That's unfortunately where patience comes into play. We move over to Ethereum. It's a similar story continues to prevail. That, in fact, obviously our record high here is even further away, which I don't think is reason to be too negative on the outlook. If we go to the weekly chart here, if the weekly chart behaves, there's your record high. It comes after, as we said last week, I think, and probably before, a massive move off these April lows. So it's perhaps not surprising that this consolidation seems to go on forever and ever. Of course, in reality, it's gone on for about 2.5 months. And this signals, I think, that we're just having to digest all these huge gains from April onwards. So what we had over the past, over the week so far, again, similar to Bitcoin, this 4,200 area was where the sellers came in. It does chime nicely at the moment with that 50-day moving average. I've just put that in roughly to give us a sense of the trend, but sometimes you do see those moving averages providing support or resistance. But it's notable that it's faltered roughly where it did again on the 13th of October, 13th, 14th of October. Not yet retested these recent lows, and perhaps that's encouraging that you do at least have some kind of support coming through in a trend line that might underpin another test of 4,200 to see if it can get back above the 50-day moving average. If it can do that and close above 4,200, then obviously the next thing to watch becomes this area here in the zone, if I can draw it maybe with a box, around 4,700, which is where the gains stalled from the 12th of August onwards. And then we hit that most recently on about the 7th of October and had that drop back down towards that 3,500 low. So this is still, doesn't look much like consolidation because it does look like it's sort of beginning to break to the downside. But I think it's still very much in that zone of consolidation. Most obviously, this key area around 38.50, because that was an area of resistance on the way up. We had a little bit of a drop back off when we first touched it, and then off we go. It then provided support on the 25th of September and all the way through in October so far. When we've dropped to this area, we've then begun to see buys begin to emerge. As we said with Bitcoin, it's not really yet developed the upward momentum or the strength to push through those recent highs. But it probably is, bearing in mind this is a much longer term uptrend, it probably is, and I say this guardedly, but with probably more likely than not that we do eventually get through it. The risk, of course, is that if you bought these lows, say from the 12th of October onwards, and you're sitting on it and you're feeling a bit disappointed, shall we say, with the fact that it hasn't resumed its march higher, the risk is that if you sort of close the trade out of boredom and then you see it rocket high, we'll just miss the move. It sometimes requires you just to sit on this and allow it to work in your favor. But certainly in any more of a sustained move to the upside, we're looking for that test of 4,700 and upwards. If it can do that, and obviously goes the zone of resistance there goes all the way up to the August record high, just below 5,000, there does signal potential for more strong gains ahead. But it is, unfortunately, a necessary sort of consequence of having such strong gains from those April lows that you have to have these extended consolidations that feel very frustrating at the time. We go on towards Solana. It's almost an identical chart. In fact, if you sort of jump back again, you can certainly see the similar kind of outlook prevailing here. Here's your record high, excuse me, for the 18th of September in this case. Then we go all the way back down to 180, which is definitely the area to watch here. And it's notable, yes, we've had that positive divergence here from late September into late October between stochastics and the price action. So reminder, that is where the price makes a lower low, but stochastics or RSI, if you prefer, or MACD make a higher high. So it can be seen as a positive signal. I know it's one of the things that Axel personally looks for. But as ever, doesn't always work out perfectly. It is at risk of being a bit of a false signal at this point because, he says bravely, you've had obviously these 2 days, again, like Bitcoin, the 2 days heading lower on Monday and Tuesday, stopping at around 200, which raises the risk, if it doesn't start to pick up now, that we do then head back towards these 180 lows and really it begins to put a bit more pressure. And we'll see whether that becomes support once again, whether it can still be defended. Remember, with support and resistance, there's no cast iron guarantee with this. Obviously, support and resistance levels get broken over time because otherwise markets wouldn't go anywhere. But the fact remains that we've seen this area emerge as support. And so if we do get back down there, the question will be, can it repeat the trick for what, a fourth time now since about the 10th of October? If it can do that, you can take heart from that fact. The more support gets tested, the stronger arguably it is. The corollary of that is that when it does finally break, it tends to go dramatically, and that works for resistance as well. So bear that one in mind. But for Solana, in this case, the number to watch on the upside, if we can clear it, is a close above 200. Although you've also got, there's always a but here, 210 as another area that could provide just a little bit of resistance on the way up as well, because that was where this strong bounce from early October really ran into the ground. And it's notable how we've constantly been saying at the beginning of every week, it looks like we're due a bit more of a sustained move, excuse me, to the upside in crypto. And then it doesn't materialize. And it's just the necessary consequence, I think, of really all these gains, and even in Solana, not as extremely strong. But when you think we were down at 110, even lower, of course, below 100 on the 7th of April, the fact we are trading all the way up here around 200, it might not be the most explosive gain in crypto land that you've ever seen, but it is still a very, very strong rally. And these things just have to have digestion. Whereas the record high for the sort of Ethereum and that kind of thing is back earlier in August. This one is only in September. So you are still closer to it. You probably put Solana in between Ethereum and Bitcoin in terms of perhaps the outlook, but it's slightly more encouraging that the record high is not as far away on that front. But at the moment, as I say, this is the key thing to bear in mind, that your price action around the 200 level is roughly about where, if it can break that, that would be the more sustained move to the upside that we're looking for, really. If we round off maybe with XRP, where, of course, the price action is really much less encouraging. It's hard to be too optimistic about this one. Just looking at it since these highs in July, it's really been a series of lower highs and lower lows where your bearish chart really does come into play. And crucially, here you've got this resistance around 2.7. It could be, and it's encouraging that we've rallied this morning, but it could be that if you do get a sort of substantial close low below 2.55, below 2.5, that triggers another lower high, and that could be slightly worrying. But it then sort of signals that this downtrend has resumed, because set-wise, buying the dips has been okay in, say, Bitcoin, Ethereum, and Solana. Selling the rallies in this one has been, unfortunately, the way to go. Really, this is sort of pattern that's emerged here, where the others have held up relatively well, and you can certainly make a case for saying why it's defending support around 2.3 relatively well, but it is still seeing these lower highs as well as these lower lows. And as you can see there, that break of support from the 1st of September around 2.7, and that was tested again at the end of the month. Once it went, it then led to the break below. And crucially, of course, it's wonderful when these things align in technical analysis. That is your barrier from this week. So that is your line in the sand for some kind of sustained move to the upside. If it can get back above there, you can be a touch more confident that maybe we then see whether we can sort of start to reverse these lower highs. and then move to test back 3.1, and then on to 3.2, and then ideally, obviously, over the course of time, and don't forget markets tend to take longer to rise than they do to fall. Over the course of time, we get back towards 3.3. So I think if you're a fan of sort of XRP, you feel the pain because it's not really been as encouraging a performance as it has for the other crypto prices. And indeed, you've got much more of a sign of a sustained downtrend emerging here than you have for the likes of the others. But overall, these sort of four of them in the main crypto space is the ones to watch. And I think probably the most positive chart, I think, would probably go with Ethereum in terms of expecting a continued upside, whereas Bitcoin probably following a close second, but slightly disappointing that this positive divergence, as I said, has not really been followed through. And as we've been talking, you've seen Bitcoin give back some of those gains. So really a mixed week. You can put it down to the absolute storm of data and news that comes through over the next 48 hours, obviously not specifically from crypto, but it could, I think, have a bearing on crypto price action, and undoubtedly with some strong momentum in stocks and indeed possibly in gold this morning beginning to revive. It's probably taking some of the life out of the crypto space, but it's at least encouraging that we've not yet, at least in the case of Bitcoin, Ethereum, retested these recent lows. It's just that we've not seen them be able to push on to these back above these highs for the beginning of the week. I think that's everything from me, unless I've missed any other one. But that's all good from me. Thank you very much. Axel will be back next week, and hopefully you won't have a cold like I do this week. So thank you for your patience. Thank you for bearing with me, and have a good day. Don't forget to like and subscribe.